if you start to notice more nuances and you make a note about it because you're back testing, you're not trading, you're calmer, you have the time to pause it, to think, to make your notes, and then you can correlate how many times you noted this one specific thing in this month of back testing. This exact situation presented itself maybe 10 times. Well, that's really valuable data that you can think about. Okay, so half of the days this setup looked like this. If I were to see it again, what triggers could I catch sooner in order to execute on that? And that is data that you get to use to fine tune your system. Say you like to enter based on a level when it's retested and then it fails until you go in the other direction.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1, for starting your day with calm intention. 1, to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description.
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
Hey everybody, it's Becky, host of Market Mamas. Thanks for being here with me today. And I just want to talk to you guys about something that I am kind of digging into lately in terms of my trading journey, and I'm really into it. And I just want to share it and see what you guys do with this, how you approach it, what you do, how you find value, and where you go with it in terms of strengthening your trading system. So what I'm talking about is back testing. So I have been a trader for 4.5 years now, more than that. And I started knowing nothing. I didn't even know what a candlestick was in terms of the charts. And so I really learned a tremendous amount. But in the last couple of years, my system has niched down into kind of the metrics that I use, the data that I use to formulate my trade plans. And so in this last couple of years, I'm in the fine-tuning phase of exactly what I look for, which time frame is my favorite when I look from the larders down to my execution time frame, what I prioritize, what I look for, what I make notes on, which level, which time frames I draw my levels on that I like to lean against. And so in this last couple of years, when I'm fine-tuning all of that, I'm really spending a lot of time each day working on the charts for that day, right? I do my charts the night before I trade. I'll pull up the data from the day and I'll see kind of process what happened, how the day ended, what the daily chart now looks like with one more full candle printed. And then I'll start adjusting my levels on my charts from there. And so the night before, I set up my charts in terms of what the value area is, what that looks like, what the key levels are. And then in the morning, part of my pre-market routine is to update the levels with anything that happened overnight that needs to be factored in, and then to kind of just relook at everything and prioritize where we moved at overnight and which levels we're closest to and where it might react from. So intraday, intra-week, I'm really focused on real-time data. But my mentor, Jermaine, I mentioned him so many times because he's really been instrumental in my growth. But he's really encouraging us to do some sessions of back testing so that we can really drill in the specifics of our system. And I spent some time on that this last weekend, and it was so valuable, which, I mean, we should do what our mentors tell us. Like, we use them as mentors generally because they know more than we do. They're farther advanced in their career. They have skills that we don't quite yet have dialed in. And so ideally, we're all like learning and listening from our mentors. But I'm busy, right? I could say I have excuses. Like, I'm busy. I have parenting and the podcast, trading, like real life. I just hadn't got to it for a while, but I really dug in this last weekend. And I just want to talk about the lessons that I took away from that backtesting session and why I think it is so powerful and how I think we can make it work and why I think it's worth scheduling the time for it. So I know certain traders will backtest every week or two without fail. They'll spend some time. They have that time like blocked into their schedule on a weekend or what have you, where they just sit down with the charts and they focus and they backtest. They do however many days. They're looking for certain things. Sometimes you can backtest, just free backtest certain days, or you can backtest for a certain strategy every time this pattern presents. What does it look like? How do I trade it? What do I do in that situation? So you can have different priorities for different backtesting sessions. But I know a lot of really experienced traders will focus in and have time set aside to do this backtesting session regularly. Now, if you're a trader and you're still developing your system and growing and learning even what to look for, I think this time is even more valuable, because this is my first little gem that I took away from it, which I've known, but was reminded of this weekend, is that when you're back testing, the stress is not there of having to execute a trade. You're not focused on, when do I get in? How do I get in? What if this candle closes this way? What if it closes this way? What's my signal look like? When do I want to take this move? It's being countered. Is it going against my stop? There's so many added thoughts that can rush into our brains when we're in a trading session live that it changes your ability to see clearly. That's a whole factor that has to be managed for a trader anyways. But it's sort of the energy that you have to process when you are a trader. Now, when you're back testing, you're not trying to enter and exit a trade necessarily. Your leverage is not on the line. Your accounts are not on the line. So there isn't that added strain, pressure, psychological energy behind looking so much for getting your risk on. Instead, it's more looking for the data, seeing what presented, how long these patterns truly took to set up, how long it took for the ideal entry opportunity to present, what that looked like, how you could get in that situation. And so that is gem number one. Backtesting is amazing because you don't have the extra psychological pressures on that you do during a real live trading session. Now, the second part of this is there's two different ways to backtest. You can backtest without doing any entries or exits, where you're just purely looking at the data, thinking about it, making your notes, making observations, making notes either on the chart or on a separate data sheet that you're collecting your information from your backtesting session. We'll talk about that briefly, two different ways to do that. But in the first method here is just looking at the information and making notes, essentially seeing what, when, how it looked, how it played out, what was the outcome, did this trade win or lose, what were the risks, where did it potentially fail, etc. Now, you can also backtest. Many platforms will have a program where you can backtest and actually simulate entering and exiting the trades. So just TradingView. That's a very common one that a lot of people have. You can backtest in TradingView, and you can simulate a trade saying, buy, sell, etc. Manage it this way, scale out here, move my stop here. And in that situation, it's kind of great because you get to see the outcomes of your trades, and you get to see, did the session in green or red? When I got in here, what was the outcome? I like that also because it's a low risk opportunity to actually place the trades and feel out your outcomes. You feel a trade more strongly when you have some sort of leverage on. Even if it's just in a backtesting simulated environment, you are still executing trades. And so it will teach you differently. And then you'll have an outcome afterwards of how it went. I'll caution you, though, because I've done this. It is easy to get fast and loose with that situation. And so if you're doing it to seriously see if you can fine tune and really do a good job managing your system, executing your trades how you want to, do it intentionally. I think being sloppy with it and just throwing 10 contracts in and seeing if you can get, 20K in a day, if that's not your true reality and leverage, it would just mess with your psychology almost to do that without it to any real goal. I would encourage you to instead simulate trade what you would actually like to live trade. Do it in a way that is most matching your true choices, because then that will help teach you how to do it in real time, give you the muscle memory per se of what you want to do in the real world environment. However, with lower stress, because there's not actual your accounts and leverage and real-time action. So if you normally enter with one or two mini contracts, that's where you should do with your backtesting as well. And then in that situation, also try to really dial in your most precise, accurate entries based on your system, and take it seriously in terms of, I'm backtesting, but I want to pretend like this is real and really get good. Use it to get your skills better, faster, more responsive, more patient, sometimes waiting for your signal to fire off instead of trading more intuitively. And, I see this energy going this way, so I'm going to go this direction, instead of maybe your system is to see the direction going in that way, seeing the action going in that direction, but waiting for a specific setup, waiting for a candle to present and test your level and hold, and then it to momentum to break the direction that the price is moving. If you can wait for that, your precise entry criteria, and then execute your simulated trade in the backtesting scenario, that will train your muscle memory and your brain memory so much more rapidly and accurately for what you want to do in real time. And in that way, it can be really powerful. So 2 different methods where you're actually entering trades in that simulated backtesting environment, or you're just looking and making notes. I think both are valuable. It sort of depends on what your goal is with this session and with what data you're trying to gather from it. For example, I'm trying to drill in my patience. And in my recent backtesting session, I actually did not trade where I entered or exit any positions. And instead, I just pulled up a day and really just looked at it. I looked at when it did certain behaviors, what the candles looked like at my levels, how they transitioned. If it was coming down into a level and holding and turning, what did that look like? How many minutes passed before the turn happened? What did it look like to turn successfully and then the next trade to set up? Was there fake outs? Was there a stop out before it really took off? What triggered me to make me think that this certain trade was setting up? And then when that happened, what then did it look like for me to get an entry criteria opportunity in order to take my next trade? And so when I was studying the charts, it made me really think about, in this day, what would have been ideal? Should I have waited? Should I have not touched buy and sell until such and such time? And if so, how could I have known that in real time? How did I know that they were sort of barcoding and printing on top of each other, consolidating at a level? And then what did it look like when it finally broke out? And that looked like momentum coming off of a certain candle after maybe 20 minutes had passed. And that was enough time for an accumulation or a distribution period. And then the breakout. And then if it was a breakout trade, for example, what did it did? Was it a purely momentum and it just flew, or did it break out and then give a retest for potentially another opportunity to enter for your first time or to add to your position? Do you want to trade the momentum, or did I want to wait for the retest? And so by backtesting the days that I trade and looking for certain patterns, it will make me quicker with pattern recognition. The whole point of backtesting, a big point of backtesting, is to improve your experience, is to give you more screen time that fine-tunes your pattern recognition and your ability to just be a tiny bit quicker, just 5 seconds quicker at seeing what you see, or at saying, I can see this as a potential fake out because I've seen these fake outs when I've backtested, and it can look like this or this. And so I'm going to wait and I want to see which direction it's going to print. And then that will give me the information that will tell me how to move forward from here. And so that critical thinking is a little bit quicker because you're saying to yourself, I just recently backtested a whole month of these days. And from that backtesting session, I saw that if I can be patient for 20 minutes after this sort of hint at the market direction based on this price action is printing, then I can usually get a really good entry, and the trade will move after that because I wasn't first in, first out. I didn't get in the chop when the trade was still setting up. Instead, I remember from my backtesting session that there is a period where it's really getting ready to go. And so if you can just have patience through that period and wait for your entry until you see a perfect break or what have you based on your system, that can be your best setup for not getting stopped out, for letting the other people get stopped out and frustrated and impatient and closing their trade in the chop for small win, small loss. And instead, maybe just shoot your shot for your morning trade session at the best move when it really takes off. And for me, I think I am already getting quicker at identifying those sooner by having more backtesting in my recent history. I trade pretty much every day, Monday through Friday at this point, which I love to do. But even that exposure of trading almost every day for 4.5 years, it's not everything. It's not all that I can learn, right? There's more to learn. And sometimes by backtesting a day that's not live in front of you will make you think more critically about it differently. You're not having the pressure of your day schedule and what you need to do and what your P&L was yesterday and what your goals are for payout and like where your account balance is. But instead, you're more curious. And when we come to the charts, whether it's in real time or in backtesting, studying, what have you, when we come to the charts with a more curious energy, we notice more. You can catch more differences, subtleties, nuances. And then if you start to notice more nuances and you make a note about it because you're back testing, you're not trading, you're calmer, you have the time to pause it, to think, to make your notes. And then you can correlate how many times you noted this one specific thing in this month of back testing. This exact situation presented itself maybe 10 times. Well, that's really valuable data that you can think about. Okay, so half of the days this setup looked like this. If I were to see it again, what triggers could I catch sooner in order to execute on that? And that is data that you get to use to fine tune your system. Say you like to enter based on a level when it's retested and then it fails until you go in the other direction. Well, your data can help you systematize your trade plan in terms of, I have found evidence that if I wait for at least this 3-candle pattern to present at my level, and then this is what it looks like when I get my ideal entry on a retest, maybe that information can help fine tune your rules. And if you have really clear rules, you're going to have a more successful and a more consistent system, because when you lean into kind of a rules-based core to your trade plan, there's less variability with it. There's less opportunity for your emotional, discretionary energy to kind of mess with your trade system. If you say, my data says, 7 out of 10 times it's going to set up in this way, and my best opportunity will be after this monkeying around, stop taking potential, and then there's an engulfing candle out of my level. Well, if that's what your data says, you're going to be less jumpy, less impulsive, less nervous about whether or not you're going to get your entry, and is it doing it now? Is it not going to do it? You're going to second guess yourself less because you can lean into the data. And so that is a more powerful way to have a system around trading that's a little less discretionary and a little more rules-based. And you can't come up with rules when you don't even know what you're looking for, and you will gain information in a real trading session on what you need to look for just by being at the charts, just by being a trader, by executing, by feeling it out, by recognizing when you're stopped out and how that felt and what the stop out, how that went about. Did it just like wick you out and go back in your direction? And so it was too tight potentially. Maybe your stop was based off of the wrong data size, or was the stop out was correct because your move was wrong and it flew in the other direction. So thank goodness for that stop. That's data that you need. Are your stops too close, so you're just getting like wicked out and you're becoming liquidity for the market? Or did you find data that supports where and why your stop should be at a certain place, in which case you should trust it and honor it. And if it is taken, that's because your trade was wrong. And so then it should be taken, because that's how your account stays safe, by not just having open-ended risk. And so backtesting to figure out not only entries, but also stop loss management, where it should be placed based on the instrument that you trade, the time frame that you trade, the leverage that you trade. By doing research personally into your system and how it has looked and what the success rate is of having it this place, whether it was correct or incorrect, that's really important information to have in order to make your system more robust and more accurate to your instrument and how you like to trade. That way, you're even more protected when your trading days are upon you. You can lean into your information. And for me, the day after my backtesting session, when I traded, I was so much more peaceful. I was calm. My shoulders were back. Like, I knew what I was waiting for. And when I saw it, I traded it. Like, I took 2 trades that day and they both just were green. And that was such a good feeling because I had shown up for the work. And so I knew more so what it would look like if I got a really good setup. And then I did. And so then I didn't hesitate to enter. And I held my runner a little longer, because my backtesting showed that my secondary targets are almost always hit. So I don't have to squeeze or be nervous as the profits are printing. I can kind of ride it a little bit more with a little more ease, recognizing that I identified this target for a reason based on my read of the markets and my levels that I have learned to lean on, and knowing my instrument and how she tends to move over time. And so in this way, you can kind of merge systematic trading with discretionary trading, because you have data that really dictates how you want to operate on the charts. And so collecting your data in backtesting sessions is going to be a superpower, because whether you've been a trader for a year or 5 years, it will still refine your skills, because it gives you information in a different situation. It gives you information with no pressure on, where you can, again, notice the subtleties and the nuances more so, and really take in the data that's going to help you fine tune it. And by proactively adjusting your system based on data from both live trading and hands off just studying, it's only for the improvement of your outcomes. Like, it will only make your system stronger, more robust. You'll be more centered as a human. You'll be less emotional in the charts because it's less of a, I got to try and do this right. And more so like, I'm not trying to execute a trade unless I see my ideal setup, because I don't need to risk my accounts until it happens. And I know that by my back testing, I get great opportunities every day. It's just whether or not I'm patient enough to wait for the ideal setup and then executing on it. And I think that also was another benefit of backtesting, is that you can see when you look back on different days that there was a couple of really good setups in your trading time. In the session that you are at the charts, there's almost always 1 to 2 for me and my system, really good opportunities that I feel like I could capitalize, that I understand, that I was looking for when I backtested and I saw. And to know that they happen, and that they happen at various times in the hour or two in the morning. And so when I can be patient and really hold back myself, hold back my trades that I want for the day until it really presents, my metrics are going to improve. Like, that is going to make me a stronger trader. It's going to make me quicker and calmer. And I'm going to be able to hold my runner farther because I will have waited for the most ideal setup. And when you wait for your most ideal setup and it's the best trade opportunity of the day that you could identify, I mean, there's variances to that and nothing is perfect. But if you really do wait for your best A+ setup, chances are you're going to get your better outcomes way more often than a setup that you think is ready and you're entering before you really get full confirmations. So that's my nod. I wanted to talk about this back tested because I had a really enjoyable session, and I already can tell it's playing into the way I'm executing on my charts. And I'm so pleased with that. And I want to just remind you guys, I mean, I think everyone who is a trader has heard that back testing is important and that it will make you a stronger trader. But I would argue that it's not only for the new traders. I think it's for all of us, because it will make us better. It will make us better. And if trading truly is our business, this is essentially the studying and the research that we need to do to be our best, to operate our business with the ideal data and information and experience. And trading is something that, if you can weather it, if you can get better with time and not quit, you do get stronger. You get to become a better trader. You get to personalize it, make it your own, see your patterns sooner, figure out what your best setups are and which trades speak to you, and then get better with firing away at them. Then this is your business. And so if that is what you want to do with your life and with your trading career, then it's so important to lock into showing up for the work of it. And I don't think that the work is exclusively intraday trading. I think it's also the back end work, which is preparing your charts the night before, processing the day's information, journaling about your experience, your trades, what happened in a day, but then also periodically sprinkling in these backtesting sessions where you are just looking at the market with no pressure, looking at your trading session, whether you're trading New York session in the morning or something else. Look at the times that you most traditionally trade your system and backtest that time, because like that will obviously be the most powerful. There's no point in backtesting when you don't even trade. Prioritize looking for your setups in your trade time, because that is going to refine your system most powerfully. I mean, by all means, look at the market all the time, but do the work that's going to give you the highest outcome for the desired results, which is making your trades the most effective during your trading time. So I think we all should backtest. I think, let me know what you backtest, how you backtest, what system do you use. I know TradingView is the one I enjoy most when I'm trying to execute. And then for just researching the days and backtesting and note-taking and not executing trades, that you can do on any system that doesn't even have a backtesting program, such as TradingView, because you're not trying to simulate tradings in a previous session. So let me know how your trading is going. I am Becky and the host of Market Mamas, and I am a futures day trader. I also do some options, and I'm here if you guys ever want to chat or get to know me better. I'm kind of working on my community a little bit, but do me a comment. And if you're here to the end, please, I hope you're subscribed and you like this video, because otherwise, why are you still here at the end? Anyway, Thank you for being here. Happy trading, happy backtesting. I really do. I wanted to make a video about it because it's been good for me. And I think it's actually a powerful subject that I want you guys to dig into as well. And if you want me to, maybe one day, another day, maybe in the next year, I will just do a backtesting session within my episode here and show you an example of that if you guys are interested. So leave a comment in the show notes here in the comments if you are interested in me doing something like that, and I will totally knock it out for you, show you what I do. All right, everyone, take care and happy trading. Bye.